Well, obviously, gold hit nominal highs in many currencies, including the US dollar. It's over 27%. In the Eurozone, where I am, it's over 33%. In the Swiss franc, 36%. So obviously a very good year for gold. Again, that wasn't just market genius. I wasn't alone in that. I certainly was bullish for both, which is ironic because usually I'm very cynical, and I still am cynical about markets, and we could talk about this year. But, again, with gold, and we'll get into more detail, for gold it's always simple because debt never changes, and there's a debt collapse driven by sovereign debt crisis, not just in the U.S. but globally. And gold doesn't rise because it's in a bull market. It rises because fiat money's in a bear market. And that, just simply isn't going to change. It hasn't changed. It certainly hasn't changed yet.
The precious metals market is currently at a pivotal moment, with gold prices steadily climbing and capturing the attention of investors and analysts alike. Canadian mining entrepreneur Ross Beaty, renowned as the founder of Pan American Silver, has emerged as a key figure in this discussion. His prediction that gold could reach $3,000 per ounce by the end of 2025 has generated significant interest, particularly because he believes this milestone could be achieved even in the presence of a strong US dollar challenging conventional market expectations. At present, market conditions support this optimistic outlook, with gold trading around $2,760 per ounce as of Wednesday. Several factors have fueled the metal's recent performance, including concerns over U.S. tariff policies and anticipated Federal Reserve interest rate cuts in 2025. Although strong equity markets have presented some resistance to gold's ascent, declining U.S. Treasury yields and periodic weakness in the dollar have helped sustain gold's upward momentum. Beaty has also pointed to a broader trend of countries increasing their gold reserves to reduce dependence on the US dollar. Since Russia's invasion of Ukraine, global reserve management has undergone a noticeable shift, with nations such as China, India, Uzbekistan, Poland, and Turkey significantly boosting their gold holdings. This movement reflects a broader effort to diversify national assets. Russia's response to Western sanctions shifting toward reliance on the Chinese yuan and gold highlights both the potential and the challenges of seeking financial autonomy. While the yuan has increased Russia's economic ties with Beijing, attempts to establish alternative gold trading methods outside traditional financial systems have proven complex. Before we continue, make sure to subscribe to our channel and hit the bell icon to stay updated with the latest insights. Don't forget to like and share this video to support our content. Ross Beaty has acknowledged the market's unpredictability but maintains that as long as central banks continue acquiring gold due to diminishing trust in the US dollar, both gold and silver are poised for growth. He specifically highlighted silver's strong potential. Market projections suggest that gold could surge to $3,290 per ounce in 2025,
despite kind of having fundamental problems with this market bubble, but the Fed was clearly signaling a dovish 2025. And my simplistic reduction of how markets work is when a central bank is dovish, markets tend to rise, and when a central bank is hawkish, they tend to retract. And last year at this time, it was fairly obvious from November all the way into December and January when we met here, that Powell was throwing in the towel on rate hikes and going into cuts, which is precisely what happened in 2025. It wasn't in 2024. It wasn't until later in the year, but it was already signaling. And the market, again, being Pavlovian, just the carrot dangling of a rate cut got markets galvanic and hopeful, and it was a tailwind, and we saw a pretty decent year in the S&P as expected. But again, rate cuts to me were a sign that despite not hitting target inflation and not beating the inflation, taming it, that rate cuts were a desperate move at the same time. So it was kind of bipolar, but it certainly was a tailwind for the markets. But rate cuts were also a tailwind for gold. And so obviously gold hit nominal highs in many currencies, including the US dollar. It's over 27%. In the Eurozone, where I am, it's over 33%. In the Swiss franc, 36%. So obviously a very good year for gold. Again, that wasn't just market genius. I wasn't alone in that. I certainly was bullish for both, which is ironic because usually I'm very cynical, and I still am cynical about markets, and we could talk about this year. But, again, with gold, and we'll get into more detail, for gold it's always simple because debt never changes, and there's a debt collapse driven by sovereign debt crisis, not just in the U.S. but globally. And gold doesn't rise because it's in a bull market. It rises because fiat money's in a bear market. And that, just simply isn't going to change. It hasn't changed. It certainly hasn't changed yet. And so 2024 was, again, not totally easy to see, but fairly accurate. And to your question now, on 2025, on the markets, I'm less bullish. Again, not just the Pavlovian, see what the Fed does already. Powell. It is fascinating, by the way, that we have to spend so much time talking about a central bank to discuss markets, because technically, ideally, we should have natural supply and demand, free market discovery, fundamentals, balance sheets, price to book, price to earning, a basic Benjamin Graham Buffett analysis of markets. But what we're really talking about first is the central bank. And again, as in this year, Powell is still dovish, but moderately dovish. He's talking about rate cuts, but throwing out the possibility of less rate cuts or even a potential rate hike. Just that kind of moderate language as opposed to strongly dovish language. That is already a signal that the markets are a little curious or concerned.
Market is significantly smaller than those of copper and gold, making it more susceptible to price fluctuations. This heightened sensitivity means that even minor changes in supply or demand can lead to substantial price movements. Looking ahead, the outlook for gold and silver remains strong, with continued central bank purchases and global economic uncertainty driving demand. Gold has demonstrated resilience by defying traditional market trends, while silver has thrived due to